I start with a perfect kitchen. I think you should look at this picture. It's the perfect kitchen when you look at the dairy products all over the world, and it's very well known dairy products from Arla Foods. But I wish to say welcome to all of you to this press conference where we're going to present the annual results of Arla Foods. And to help me here, Peter Tuborg, the CEO, and the CFO, Natalie Knight. So we're going to do our best to do the presentation of the annual results. Dairy business, as we know, dairy business from the last 5-6 years, it's quite volatile. And the volatility is changing rapidly all the time. So it's a challenge business that we are running. And the mix from 2012 to 2017, that is tough, and that is tough years, it's good years, and that affects us as a business. It also affects the farmer-owned Arla, where the farmers are dependent on the milk price, and we, as farmers, we remember the tough years, and we also will remember the good years. And 2017 will be remembered as a strong dairy year for the dairy business and also for the dairy farmers. And we have expected to get a good year as a farmer-owned business, both for the milk price and also for the business. And the report shows that Arla Foods is in a strong position just now. We had a board meeting yesterday, and the reactions from the board were very pleased to see the report of 2012 and to meet our members on the district's meeting here. So it's the time where we saw prices that we haven't seen before, and as a dairy farmer, when the prices on fat reach a level that is the highest ever, as a dairy farmer, I think it's really good, and also that comes to the business. So with that, welcome to all of you in this room with the press conference, but I also know that there's people out there because this press conference is live streamed, so welcome to all of you. And after that, leave the word to Peter Tuborg.
Thank you. Thank you very much. Also very welcome from me. Just a short introduction from me, because I actually think that we should get into the details together with Natalie in just a few minutes. But for me, I would like to say that the report, when you read through it, and then when we will probably discuss it a little later, shows that we are traveling our strategic journey, Good Growth 2020, very well. We have seen our brands growing, driven by prices, but actually also underlying volume-driven growth, taking market shares with our brands, and that is exactly what we would like to do through innovation and brands to grow our market shares in the market, both in Europe and outside of Europe, and that is what we have done. We've also seen with great pleasure that our international business, through the volatility of 2017, has grown with 10%, or even slightly above, which is exactly what we have wanted and wished for, and it's an all-time high level. Not to forget Arla Foods Ingredients, which is one of our crown jewels in Arla Foods. We keep on investing in Arla Foods Ingredients, also, as you know, going forward. And we've seen that Arla Foods Ingredients has performed very well, top line and bottom line wise, in 2018. A last remark from me is also the balance sheet. The balance sheet is yet again strengthened. Our balance sheet is in good shape, which is also why we have put forward and the board has approved a historic high investment program for 2018 across the board, investing in the best of our facilities in Arla Foods. And we can only do that due to a strong balance sheet. So that is part of the equation. I think that's what I would say as an introduction, and leave the word to and floor to Natalie.
Good morning, ladies and gentlemen. I am excited to present to you the 2017 results. And the reason for that is that I believe we have some really outstanding headline results. We've seen our sales on an underlying level grow at the highest rates of all time. We've been able to increase our paid milk prices to farmers by almost 25%, and we've done all of that on the back of a pretty volatile environment. We've improved the quality of our business. Yet again, you heard Peter talk about the strength of our balance sheet. And I really think those are all things that make it proof positive that Good Growth 2020 is right on track for us and that we're doing all the right things to make sure we get there. So let's start with what happened externally in 2017 to give you a little bit of the flavor for what was happening in the environment that did make it so challenging. And what you see there is it was a year when we had peak commodity prices. There's been almost no year in recent history where we saw such a quick acceleration of what was happening with commodity prices out in the marketplace. The big story here was the fat prices. If you look at 2016, fat was selling actually at a discount to protein. Those are the two big components in our milk, at 27%. By the end of 2017, we were seeing a premium of almost 50%. And that kind of switch in terms of the value of fat was unprecedented. It had a huge impact in terms of how we needed to look at pricing of our products, what was happening with the competition, and how do we look at gaining share in 2017. In addition to that, 2017 was a good year in terms of the economic backdrop that we were performing against. Stock markets were up, oil prices were down, you really saw GDP moving the right way. The only real challenge in that direction that we had were that exchange rates in almost all of our currencies went the wrong way. So that's something we had to look at in particular with Brexit. When we go to what was happening internally within the company and what were some of those big items on the agenda that we were moving, I think what you really see there is a focus on us really taking advantage of those increasing milk prices in the market by driving up our selling prices and really helping the prepaid prices to our farmers grow quickly. In addition to that, what we also had was volume growth, and it's very rare that you get both at one time. Either you usually grow in an environment where you say, let's push prices, or let's drive volumes. And for us in 17, we were able to do both. Our volumes grew at the high end of our target range. They were up 3%, and that's in a very different environment than where they'd been just a year ago. We also put a big focus on innovation. This was the year where our biggest CapEx expense was on the Innovation Center and making sure that we really took a big step forward in those things that are going to help us secure growth and strength in the future. In addition to that, if you look at our results, the one place where I'd say you might challenge us is on the cost. And we did see some of our costs increasing in 2017. And that's basically, though, because the complexity of our products has increased. We've started offering more milk types. We've had an increased real demand for differentiated products from consumers, and that drives cost. Obviously, as long as we are able to obtain improved margins, those are good decisions for us to make, and you'll continue to see us make those kind of decisions going forward. We talked about a strong balance sheet, and it really was. This is a year where our leverage was strong. Our equity ratio is now at 36%. This gives us the firepower we need to be able to grow in the future, and that's really critical to us as part of the Good Growth 2020. So let's look then at our three traditional KPIs in terms of performance for Arla. And what you see here are that these three were all at the very upper end of what our target expectations were. The milk intake was relatively unchanged, but when you look at what did that mean in terms of performance price, we had a 3-year high in terms of what we were being able to pay out to our farmer owners. And that's really important for us. That's the thing where I think they care most about how successful we are. You also saw our profit share come in at 2.8. That's right in the target range. And if you take out the Rundkeby effect from last year and Vigor this year, you'd see it's exactly the same level as you had in 2017. When we look at revenue, that's really, for me, one of the ones we should be very, very proud of. At 10.3 billion, you've seen that number jump dramatically. It's 8% reported. When we take out the impacts of our divestitures and currency, that's actually 12%. And that's the highest rate we've ever had on an underlying basis within Arla Foods. When we look at how did we do this, I talked about one of the things this year that's been a real challenge is that it looks like, in some ways, maybe this was an easy year. All the numbers go across nicely. You see nice little developments. But when we look at the milk intake and prices, that's a great example of, if you look at the left side here, what you see is that the milk volumes didn't really grow that much. It was up 0.5%. But what it doesn't show you is that there were big differences throughout the year and throughout our countries where we take the milk in. Within the year, we actually had milk intakes in the first quarter that were down 5%. They were up 4% in the fourth quarter. So we had big changes in terms of how that milk was coming in. And when we look at it from a market perspective, we had markets like Sweden where it was down 2 or 3, and we had it up in markets like Denmark by 2%. So there was a lot of complexity there in terms of how do we manage that and how do we really turn it into the most value as we're trying to do every day in every way with our products. So let's look then at performance price, because that's the other real big call out, I think, of these year's results, up 23% this year at a 3-year high. And as you see on the chart there, really moving continually up in the prepaids in the last half of the year. We saw the prepaid, so that's what our farmer owners get in their pocket every day. That increased by almost 8 cents during the course of the year and actually averaged about 35.8 cents through the year. So much, much healthier than what we'd seen in 2016. When we look at, however, the quality of the business, this is another thing that is really important to us, which is this is how we tell that we're really getting ready for the future and that we're doing the right things to improve how we run our business. And what you see on the left is our strategic branded volume growth. And in a year like 2017, where prices were really the biggest driver of our revenue increase, being able to drive volumes at the same time in our branded products, this is where we show you and prove that we're really changing the character of our business to make it stronger as we go forward. Our brand share is now at 44.6%. That's already almost at our 2020 target of 45%. And the international share of our business, which is much higher represented in branded goods and is also critical for our growth as we go forward, has already surpassed our 2020 target at 20.1% of our retail and food service sales. So let's move now to what's happening in those brands, because this is really something that for Arla Foods, I think, is one of the most important parts of our business. And what you see here is that the revenue of our brands grew 10%. So that's very, very strong development for us. The volumes were up 3% again. And when you look at the branded share, you see it's continued to improve in each of the last 5 years. The split amongst the brands has been pretty similar to what you've seen in the last few years, that Arla continues to be really our big and strongest brand, followed by each of the others. Giving you a little feedback on each of those brands. Arla, with this 10% growth number, is the highest growth we have had for our hallmark brand of all time. So we're very, very proud of that development. When we look at, I'll tell you a little more about that in a moment, but when we look at Lurpak, you know this was a year where it was about raising prices as opposed to volumes. We have retained and strengthened our position as the #1 butter brand in the world. We're really proud of this brand and how it, I think, shows up and relates to the consumer. Castello, this is our specialty cheese premier brand. Sales were up 3%. It's another year of positive development, and it was really driven by new product innovation and some different cheese categories. When you look at Puk, this is our brand that is big in the Middle East, and this is where we sell processed cheese, cream, white cheese, all with market-leading positions across the Middle East. And if you look at that business, it's gotten quite big in the last few years. The last area are our supported brands. This is really marked by our hallmark relationship with Starbucks, but also brands like Hansano, Fallbügen, and others, where you saw strong growth of over 5% this year, and really based on the continued strength of those winning in the niches where we can really be relevant. Just a couple extra words on the Arla brand, because this really is the mother of all our brands in the group. You saw sales were up 10.1%, very strong development, led by new product innovations like our Skyr and protein that have developed very strongly across Europe this year, as well as Baby & Me, which has grown strongly in Asia and has grown now also into Europe as well. One little piece I wanted to highlight here as well is Arla Garden Plus. You may be familiar with our quality assurance program, where this is really a place where our farmers are committed to making their information on animal welfare and all of the things that they do with processing their products very transparent and increasing the traceability, because we really believe it is key that we are as aligned with consumer needs as possible. And we've now got, within the last 4 months, almost 90% of our farmer owners committed into this new digitized program that really helps us take a big step forward here. So let's move into our commercial segments, because I think that's also critical when we're looking at how our business is developed in 2017. And what you see here is that we focus on 4 big segments. The biggest is Europe, which I'll talk about in more detail in a moment. It's about 63% of our business, so very critical in terms of everything moving in the right way. And sales there grew 4% in 2017. Our international business, which is key for our growth ambitions as we go forward, is about 13% of business. And there you saw sales grow, sales grew 13% in that part of the business. Our trading business is also something where we saw sales grow strongly. They were up 18%, and that's because this was an environment where, as prices were moving up, we did take some opportunistic moves in trading to really capitalize on those price movements as we were able to bring them to life. And I don't want to forget AFI, which is our most profitable segment, and it grew 20% to over 650 million in the year. Now, when we look at our regions, I'm talking now here about Europe, retail and food service business, which we told you is about 63% of the business. Close to 50% of this is branded, and you saw a 4% increase in sales. Now, I could talk to you about all of these markets in detail, because this is where we really have a lot of passion and heritage. I'm going to focus today, however, on the UK and Germany. And if you'd like, we can talk about more in our Q&A session. The UK, the reason I talk about it is because I think one of the things that doesn't jump out when you look at our numbers is that the underlying development was very strong. This was a place where Brexit and currency rates have played a little havoc in terms of how it appears in the annual report. On a constant currency level, our UK business grew by 8% in 2017, so very strong results. This was something where we were the fastest growing FMCG company in the UK. We now have a number 21 position with Arla brand, number 14 with the Lurpak brand. We are really moving up and gaining shelf space and consumer mind space in this important market. We also had with our B.O.B., our best of both, a real innovative milk product. We were the number 1 best product rated in the UK. It's the 3rd year in a row. So we're really developing, I think, a strong reputation for innovation and great products in this important market. It's our biggest market in Europe, so it is really key for us to win there. The second market I talk about today is Germany, and I say that because I think many of you know this has been a bit of a troubled market for us in recent years. And this is, again, a market where if you look on constant currency, we've seen the market growing by 11% in 2017. So very strong growth and really being led by our branded efforts. We made some hard choices there when we saw things that were unprofitable in UHT. We stepped out and looked at areas to create better opportunities, and instead we saw real growth in branded areas. Skyr grew by almost 80% in Germany last year. I expect that in 2018, this is going to be our biggest market for this key product as we look across Europe. We've also taken the #1 position in extended life organic milk in Germany. This is really important to us because as the world leader in organic product, organic milk, this is really proof positive that even in one of the most toughest retail environments, we can play and we can come out and be very successful in the marketplace. Switching now to the international markets, where we also have had a lot of success, also on the volume side. And again, lots of detail in here. We can talk about it in the Q&A session, but just picking 2 big winners out here. Let's start with Sub-Saharan Africa. This is primarily Nigeria for us, and our sales here doubled in 2017. This is really the strength of the Dano brand. It is a place where we are working with a strong partner. We've seen expansion into Ghana and moving into Western Africa. We see lots of potential here also for 2018 and beyond. I think this is a real critical market for us when we look at the international environment. In addition to that, excuse my voice, let's also talk about China, because China is a place, if we look at that in recent years, we really spent a lot of time investing, making sure we worked with our partners well, and this was the year where we saw that step change in the business. Sales grew by over 80%, so really positively, and also a big step change in profitability. And that's what's important for us when we look at the Chinese market, is not just how do we grow, but really how do we grow it profitably. And the key there is infant nutrition, and we saw great growth there. We now have actually 50% of our sales in infant nutrition are going online, so huge growth rates in that part of the business, and a lot of success there as we've really been trying to increase our activities going forward. I expect to see continued really strong growth in the next couple years. The last 2 segments are AFI and trading. On AFI, I already told you this is our most profitable segment. This is where we're really focused on how do we bring high-value whey ingredients to the world? How do we make those accessible? Infant nutrition is a key piece of that because it's very high margin, but you also find our products in bakery and dairy and pharmaceuticals, really in a lot of places. And this is one where I think we've really been going from strength to strength. We've chosen to invest a lot because the payoff has been very strong for us as a group. We're very, very pleased with our performance at AFI. Let me also talk about trading, because trading is a piece where we usually kind of leave it quietly on the side. It isn't the big sexy part of the business. It's a place where we focus on how do we get the seasonality of our business better? How do we make sure that we're really getting the geographical splits in an ideal way? But this year it was important for us because as prices were going up very quickly, this was the place where you could seize the most value. And so this really is a place where we had a bit of an opportunistic approach, and we were able to see revenues grow there by 18%, which is very pleasing for us. That isn't something you should expect every year. That I think really is an anomaly in 2017, but one that we were pleased to be able to be in a position to utilize well for the group. Now I'm going to move to what's happening with cost, cash, and efficiency, because as a CFO, these are all things I look at with a lot of passion every day as well. When we look at it on maybe starting with I think the easy to understand story is the leverage. This is a place for, as a group, if you looked at us 5 years ago, we had a leverage that was about 3.7. We've now gotten it to 2.6. We have taken really big strides here. Again, when you look at the number here, you might say, hey, 17 looks a little higher than 16. Again, that's the effects of Rundkeby from the year before. If we take Rundkeby out, which was one of our juice business that was non-strategic and we sold, and you do the same with Vigor this year, which was a Brazilian business that we had also chosen to divest. If you look at those, it's exactly the same at that really good financial leverage number. Moving over to the conversion cost side, I do want to call that out as that's kind of the one KPI when we look at our results this year that we didn't hit where we wanted it to be. And at the beginning of the year, a lot of the story was we just didn't have the volumes. I told you at the beginning of the year we saw volumes declining 5%, and that means you don't have the scale opportunities that really help drive conversion cost efficiency. But the thing that really left us at a number probably higher than we would like for the year was, the flip side of the positive coin of if we're growing our branded goods and our high quality products, well, those are things that also drive additional cost. An example is when we look at our AFI business, when we're doing infant milk powder that we can use in infant nutrition versus our skim milk powder, the processing costs are 10 times what they are if we look at skim milk powder. But the margins are a lot higher than that. So those are good choices. Now, I can't tell you all of them are as a result of that impact. We did have some issues in terms of on our milk side and bringing more complexity in and increasing the packaging, and those had costs. But really, those are all, in our eyes, about how are we making our product more diversified and stronger against the desires of consumers. So I'd like now to move to our 2018 outlook, because this is also something where we're gearing up for another big year when we look at 2018. What you see is that we're expecting revenues in the 10 to 10.5 billion euro range. This is something we're expecting to really see it driven by volume and product mix in 2018. However, there will be some FX rates that we expect to be pretty significant headwinds for us that are going to partially offset some of those gains. On the profit share, you'll see us come in at the 2.8 to 3.2 range again, as always. I would just note here that, as has been the case in the last couple of years, you will see that profitability heavily weighted in the second half. When we look at CapEx, this is a year where we have chosen to do record-breaking CapEx. We want to make sure that we are ready for the future. If you look at the last couple of years, I don't think as a company we have invested enough to really make sure we're going to be able to win in the future. And this is a year where we've taken a big step forward. They're around big bets, big projects that are really meaningful. And I think this is something you're going to see as a big gain for us going forward. Our brand share will cross that 2020 threshold of 45%. You'll see our international numbers also continue to grow versus the 20%, although a little impacted by the exchange rates. You'll see our strategic branded growth grow in the 1 to 3.5%. So again, strong volume growth for us as a business. And the leverage also continue to be in a really healthy range in line with our long-term targets. Now, as a cooperative, one of the things that's also really important to us is that obviously we look at how are we making sure that our profit appropriation is really done in a way that is most suitable to our owners. And what you see here on the chart behind me is that our prepaid price has been 35.8 cents this year as an average. That meant at the end of the year we had profits of 285 million. And you bring those two together, and that gives you the performance price of 38.1 cents. Now, one of the things that our board has decided is that the supplemental payment of 1 cent will be paid. That's the 124 million you see. In addition to that, we look at interest on the common capital that they hold, taking that number up a bit. And so what we have left for consolidation is 158 million. Of that 158 million, 44 million are the proceeds from our sale of Vigor. So that goes straight into the common capital. That means our common capital in total, that's 2/3 of that number, is 120 million. And when we look at our individual capital, it's 38 million. That's really the money that we're putting in the balance sheets of our individual farmer owners, and it's higher than we saw last year. So we're very pleased with that development. So just summarizing what 27 at least meant for me, I think it was a year where we are very, very pleased in terms of our revenue development, seeing it grow at the highest underlying rates we've ever had it, being able to increase the milk price that we were able to give our farmers by 25%, grow the quality of our business in a meaningful way, improve the balance sheet, and really set ourselves up very successfully for 2018. Because this is going to be, I think, another volatile and challenging year, and it's going to require us to be really game on. And I think that's what we've done with 17, is make sure that we're ready for this year and to deliver even stronger against our Good Growth 2020 going forward. Thank you very much.
Thank you, Natalie. Åge, Peter, and Natalie will now take your questions. We ask that you would please, if you can, ask the questions into the microphone so that those watching on the streaming will be able to hear the question as well. Otherwise, we'll try to repeat it. Again, there will be some waiting afterwards, so we encourage that you ask the bulk of your questions now. So they're all yours. We'll take your questions. Lars?
Both the dollar and the pound has been significantly lower in 2017 compared to 16. Could you elaborate a little bit on what has been the combined effect of that on your turnover?
Yes, the combined effect is about 250 million on our turnover. And of that, the vast majority was the pound. I think it's about 180 million. Yes, we can also add about 25 million each for the US dollar and for the Swedish krona.
You mentioned you sold more on the trading markets this year. 18% went up. And how much did it? How much the percentage of your total sales? How much was on the trading market? And how do you expect it to be the next year?
If we look at our trading percentage, we look at the volume of milk intake. That was 20%. When we look at it for the next year, it'll probably be in a similar range. We think, kind of the low point of where we would want to see trading volumes is 15%, and maybe the top end of where you would expect to see it is something slightly above 20. When we look at last year, we actually had anticipated initially being lower than that, and then we capitalized on the opportunity. When we look at this year, I think it's one where we'll probably expect to be within plus or minus 1% of that level.
Is it fair to say that Arla grows, or do you just fluctuate your turnover with the milk prices? I mean, your turnover was larger in 2014 than it was in 2017.
Definitely milk price has a huge impact in terms of, what are our abilities and with our revenue. What we saw this year was we were able to increase our sales prices by over, exactly 1 billion euro, based on what was taking place in the market and our ability to capitalize on that with our retail and food service customers in particular. So that is something that can move up and down. But again, what we were really proud of is that if you look at that strategic branded volume-driven revenue growth, you saw that go up 3% as well. So when we look at 2017, we see some very nice market share gains, even in Europe, where we've looked at that and it's up about 1.5 percentage points in terms of our market share. And then if you look at some of the international markets, up very significantly, double digits.
I could add, if you could return to page number 5. Which shows the milk inflow since 2013. What you see here is that the milk intake in Arla Foods grew from 13, you know that it has grown even further when you go back, to 2015 to around about 14 billion liters of milk coming from 12.7. So more than 1 billion liters of milk, or 1.5 billion liters of milk in growth. That in itself is of course turnover growth. That came from the process of mergers, the last mergers actually that we did. You can see that in that growth. In 2015, we changed the strategy, saying that the milk base that we have now and the farmers that we have now as members are to be serviced by Good Growth 2020, so allowing, of course, because we are cooperative, our farmers to grow whatever and run their farms as they like. That can be with growth, as we see now, but it can also be with decline, as we saw just a year ago. And our job is to add value to that milk through innovation. So you will not see a tremendous growth of milk intake going forward, which is a main driver in our industry, not only in Arla Foods, but it is one of the levers that can grow the turnover. The other is, as Natalie pointed out, of course, the global market price level that can take it up and down. But there is an underlying inflation through the volatility cycles of approximately 2% on a global basis. And the rest is creating value through innovation. We are more focused on the value part than on the top line. The top line will flow and develop as the market develops. It is a matter about adding value and growing positions, both branded positions and attractive geographical positions, together with the best of our customers.
It's a question about white label. There has been this trend that white label is going down for many, or at least some. Friesland Campina, for instance, they decided to stop producing white label in Germany in some markets. How is the trend with Arla? How much white label do you have?
On white label, do you mean private label?
Private label, sorry.
Yeah.
Of course.
No, we don't have a particular strategy that goes for or against private label. We see it as an intimate part of how we do business and relate to our customers. Our customers, retailers, and that is across the globe, they would like to have brands as well as private label on shelf. And we are servicing them on both accounts. So we are also putting innovation efforts behind private labels on behalf of our customers. We see that in almost all countries. And if you look at our European business, you would see that the UK, and for that matter also the German market, here you see, because of the market dynamics and how they are, that the private label share is in general very high and higher than the branded share in our categories. And of course we will do everything we can to service the customers on their private label as well with innovation, quality products and services across. Arla Foods has done that through all the years I can remember, and we will remain on that note. That being said, we are doing everything we can to grow our brands, and that's why we've talked to you today about our brand growth, and that's why what we call the volume-driven revenue growth, so where you actually neutralize the price, and you see that on a couple of the slides as well, that the volume-driven revenue growth in Arla Foods grew 3%. So that tells you that we have grown the volume of Arla Foods on the brands with 3%. And that's what the strategy is about. We have to grow year on year the volumes of our brands, and then the brands will follow the price cycles as we go along. What we know is that the price volatility around brands is less than we see in the trading area as well as we see in the private label area. So the volatility is very big in trading and private label, whereas the brands are they're still volatile, but they're less volatile. We want to be measured on, amongst many other things, but one of the things that we management-wise and board-wise are talking about every month is how our brands growing, also when you take out the price component. Are we taking market shares or are we not taking market shares?
But you stepped out of some private label contracts in 2017, isn't that right? In Germany, for instance. And did your private label share in total, as a component of your turnover, decrease in 2017?
That's you have to close yours. Thank you very much. That's correct. sometimes you have to make these choices. I mean, doing business is not just a walkover. You also sometimes come into situations where you will say, okay, our milk can be used for something else that is more valuable. And that was one of the cases that we had. That being said, underlying, we are trying to grow our private label. We also won, and we have also declared that we won, and we were happy with that. 2 very big contracts on private label, one with Morrison and another with Aldi in the UK. So we are very active on the private label area, working seriously with the customers. That's how it is.
Do you have any updates regarding your joint venture with the Indonesian Indofood?
Yeah, we are working nicely together with Indofood. There's no product in the market, but the parties agree that we will bring products to the market when time is right. It's about developing the product and brand platform and making the products available. That will take a little bit of time, but the project is progressing.
You were able to grow a lot in China, and in the release this morning you said something about turning towards the food service industry. Do you expect the same growth the next year? And how do you see the food service market in China, or in general, maybe also develop in the coming years?
Close to 100% growth is not something that comes every year. so less can do it. I think that a sustainable growth in China, but also a very strong sustainable growth, would be around 20-25%. That's very super fine. But we had a breakthrough on some of the things that, as Natalie said, that we've been working on. Especially the Baby and Me grew very nicely. So the organic infant formula, coming from a very, very low point, but the organic market may be opening up. It's still very early days, but we've actually seen some clear signs of that, and we are the biggest organic supplier in the world. So of course we have to enter into that. We are working with our Baby and Me Arla brand, but we are also supplying in other branded players with our organic products in that segment. So our market share in China in organic infant formula is above 80%, I think, at the moment, through either third-party manufacturing or our own brands. And we see that segment growing. That's one of the real drivers. Food service going forward will be a bigger part of it. It's still early days for us to see how it will unfold, but we are mobilizing, and as you also know, that we are trying to increase our assortment, especially in the cheese and mozzarella area. But food service as a sector in China is growing very fast at the moment, and will probably remain growing fast.
Regarding how well you managed to give the farmers extra money in their pockets, the Danish Crown, the Danish pig meat producer, they have an index where they compare to competitors in Europe. And I would like to ask, I know that Arla doesn't have a similar index, but how well did you do in 2017 compared to your competitors?
Yeah, we actually do look internally at a peer group index and are measuring how we're doing versus our competitors in all the markets where we produce milk as well. We don't include in our formal reporting because we don't have all the information from the other companies until actually about June of this year. So that's when we'll be able to know exactly what that number looks like. But what we can say is it was a good year. We believe that our underlying performance was very strong. What I do think is fair to say in 2017, maybe versus 2016, is we are the market leader in Europe, in the UK. And that is obviously a place where Our peer performance versus competitors has been challenged because of the Brexit and the decline of the pound. So I think if you were to look at it on a year-by-year basis, our performance might be a bit lower than what you had seen versus peers in 2016, but on an underlying basis, I think we remain very confident in terms of the strength of the business versus all of our peers.
You have had some troubled years in Germany. What was 2017 like for your for Arla Deutschland? Did the company make a profit?
We haven't declared that account yet, but you'll probably come around to that when it comes. But let me just say now that it has been a much better year in Germany. We're not quite there where we want to be, but it's clearly a better year in Germany from our in our retail business than it was in the previous year. It has something to do with the general volatility, of course. The profitability in the private label contracts developed positively during the year. They started extremely low, I would tell, and they ended the year at a high note, which gives a nice, better average than what we saw the year before on the retail business.
What was your turnover in organic products in 2017? You gained, you got a lot of extra organic milk, so I suppose you had an increase in your turnover in organic products.
We definitely had an uptick in the number. Let me get back to you with the specific number on that.
On that note, you will get the numbers. On that note, we should remind each other that the volatility in price is very limited in the organic space. So you don't see the revenue uptake coming from price in organic. It comes from the organic growth of the volumes that are being pushed into the market.
Any other questions? Yep, Jan?
You didn't mention the US in any part of this presentation. Can you maybe elaborate on the US market? I know it's from a little...
It would be too easy to give it to Natalie. She comes from the US, so she could probably talk for an hour about that. But you can add, you can follow me if you want to add, Natalie. No, we started the campaign in the beginning of the year, and that has seen an uplift clearly. It's still early days to see how it ends. It looks promising, but it's also a long journey. So what you know, what the CEO normally says, the jury is still out. When will we see that it develops into that place where we want it to be? But we've had double-digit growth on the Arla brand in 2017, and that's nice, and that's what we wanted. And let's take it from there on, yeah. But it's early days.
Yeah, just add one thing, because here comes questions of how we are using our milk pool and which different markets we are on, and that's a challenge for Arla Foods. It's a quite open company, simple company, but it's also a difficult company to run because we have farmers in 7 countries. We have a milk pool that shall be handled so efficient as possible, and we use the milk, for example, organic milk, in our international markets, and it's, as you heard, it's expanding in China at the moment. Where does the organic milk come from? It comes from the milk pool in Arla Foods to handle so efficient as possible. So this to do, we have different markets and different profitabilities in different markets, but we also have to do it as the best as we can. We are working with Brexit and Germany, which Natalie brought up here at the moment, and we're going to continue to do it because we have members' milk in those countries, so we're going to continue to do it, and we are a company that are here and will be here for probably long term in the future. That's a challenge for us all the time, but we will handle that.
Okay, Let's end with those words from the chairman. We'll now conclude the plenary press conference session, and after this, I know some of you are eager to speak one-to-one with our spokespeople here. Please come and see me to get that coordinated, and we'll make sure that you get anything that you need before you leave. But thank you for coming, and come and let us know if you want further interviews. Thank you.